Hi there, this is Anthony Keane with the Anthony Keane Group with EXP Realty. And with me today is Chris Cahill with Nationwide Lending. You know, Chris and I have been together for 12 plus years, and there's a reason for that. There's never been a deal that we haven't gotten to the table. And it's not because we have any kind of business affiliation or any type of partnership. It's just the two of us together make a really good team. So, Chris, what sets you apart from other lenders and some of the creative things that we've done in the years, especially in this market right now, to get deals done?
That's a good point, Anthony. I think right now we're all seeing probably the toughest market we've seen in our time, and buyers are having huge challenges getting contracts accepted. And you and I have worked together for a long time, and I think right now one of the things we've been really successful with is getting our buyers through the underwriting process up front. So instead of getting them just a pre-approval, we want to get them a full mortgage commitment so that when they go into that offer, the seller knows that they are a committed buyer, they're well qualified, and they're ready to close.
So the mortgage commitment then, that's better than a pre-approval, correct?
Absolutely. So basically our underwriters have reviewed the client's income, they've reviewed the client's assets, their credit, and they've basically said this client is approved for a loan of X amount of dollars based on a purchase price of X amount of dollars, and then they're looking in that price range. So when they find something, they're good to go. They've been signed off on. At that point, you need an appraisal, a signed contract, and you're ready to close. And a lot of times you can close within 2 weeks at that point.
2 weeks, okay. Mm-hmm. So for the benefit of everybody that's watching, what's the difference then with somebody that says, well, that sounds like a pre-approval?
So a pre-approval is essentially when the client fills out an application, you run their credit, and you've taken the information from the application and you haven't really validated it. You've just run the credit through an automated underwriting system, and it's approved it based on the information that's been input. So you haven't seen pay stubs, you haven't seen assets, and you're really going off the client's information. And you and I both know
I was just going to say
that that's not a good move, because it tends to be something when you get the pay stubs in and the W-2s, that the income can be off, or the assets can be off, where the money's coming from,
right.
Things like that.
You know, some of the stuff that really gets people hung up is when they have a part-time job.
Mm-hmm.
How long does that money have to be coming in for you to be able to use it?
So if you have a full-time job and then a part-time job, they want you to have been on the part-time job for at least 2 years, or at least have had a part-time job. So if you've moved from one to the other, that's fine. Just 2 years working part-time in addition to your full-time job.
And the 24 months has to be continuous, correct?
Correct.
If you take 2 months off during that time frame, is there an exception that can be made?
So that's case by case, and our underwriters and our ownership is really good about going in there and making decisions based on common sense decisions. So in a case like that, if they're out for a good reason, if they were moving, got a better part-time job, and just it didn't start for a couple months, something like that would be more than likely being fine. Now, if you get stretched to 6 months in between, then you may have some issue there.
All right, so the main key takeaway of everything here is getting that mortgage commitment, not the pre-approval, especially in this market where homes are going like this, and you have to have the strongest and best offer. Having that commitment really sets you apart from anybody else that just has a pre-approval. And then some of the things that we have done together is, you know, we'll do things where, you know, you can play with the pricing. We can go up a tiny bit in rate to offer something like where the buyer will pay for the seller's transfer tax, but they're financing it with inside the loan.
Correct. And you and I have done that a good bit. It's called premium pricing. So if the base rate on a particular loan, say, is 5%, sometimes you can push that up a bit and get what's called a lender credit. So that's money back to the buyer to use towards their closing costs. Maybe they're short for closing. Maybe they just didn't have enough money saved. They're a couple $1,000s short. Maybe they want to pay the seller's transfer tax. That's something we can do on pretty much any deal. And again, it's something we're looking at to see what can we do, you know, to get that buyer in the home.
So, and just so everybody, the clarification, right? What if they went up in pricing? And when I say pricing, we're talking about rate.
Correct.
What does that look like from an increase in payment? Is it anything that's drastic, or are we talking a couple bucks?
So for every 1/8%, if you're basing that on, say, a $200,000 mortgage, you're looking at under $20 a month.
$20 a month, right? So for somebody that needs to, or needs a little bit of help with closing costs, here's a way where instead of asking for a seller's assist, we can play with the pricing and get them some money to help offset what it is that they need, where it doesn't affect their offer, and they could go in potentially higher on the offer, still get a little bit of a credit from the lending side instead of it coming from those sellers, and it puts more net profit back in the pocket of the sellers.
Correct.
Okay.
And you and I are looking at, in every particular deal, we're looking at what's the best case scenario for the buyer. How do we put this together to make it right for them, to fit them into this? And again, in a lot of cases, there's an amount of money that they have, and sometimes it's a bit short, and we can do some things to get them over the finish line.
All right, cool. Well, I'll tell you what, we'll wrap up this segment with this Q&A, and we're going to do a handful more videos, so stay tuned or watch these videos. You can jump onto my YouTube channel and Chris's YouTube channel, and you can watch these series of videos. But the next couple of videos, we're going to talk about some of the different programs each county has and some of the requirements where you can potentially get some free money. Again, this is Anthony Keane with the Anthony Keane Group with EXP Realty, and my partner in crime,
Chris Cahill from Nation One Mortgage.
Thanks for watching.